In this video, I'll show you how to identify trends, draw Fibonacci retracement grids, spot and use imbalance zones, find the best areas of interest using sideways volumes with the VPVR indicator, and set stop losses based on the smart money methodology. All of that in just 4 minutes. Let's dive in. Traders often argue, should I go short or long? There can be many reasons, but most often it's simply the inability to determine the market's direction. The tricky part is that the main trend contains many smaller trends, and each of those contains even smaller ones. With all that in mind, remember the golden rule. My go-to tool for spotting trend-based entry points is the Fibonacci retracement grid. I draw it from the most recent unbroken local high down to the unbroken low, where 1 is the high and 0 is the low. Levels from 1 to 0.618 are the premium zone. Levels from 0 to 0.2 are the discount zone. When the high gets broken, the trading range within the long structure changes. The Fibonacci levels are adjusted. 1 moves to the new high, and 0 moves to the previous low from the last impulse correction. Let me first explain the green and red lines. Here, I draw a Fibonacci grid from the high to the low and look for entry points during pullbacks. When the high is updated, I adjust the grid, changing the trading range and looking for new entries. I repeat this process until the price reaches the short level of a higher structure. The examples I've shown are in an uptrend that was part of a larger downtrend. Using the same method in reverse gives us a reason to go short. So, how do we know if a Fibonacci level is truly significant? Imbalance zones matter only in discount areas. An imbalance is an untraded zone where bulls or bears gained a clear advantage. It's built from 3 candles and shifts as price action fills it, moving forward on the chart. In simple terms, it's a zone untouched by candle wicks. The best entry point is right in the middle of the imbalance zone. The VPVR indicator, or sideways volume, highlights the most heavily traded zones. In an uptrend correction, these zones act as strong support and are great for full long positions. In a downtrend rebound, they act as resistance and are ideal for potential short entries. Combining these 3 tools gives you highly accurate entry points. If your goal is to exit at the local high from which the Fibonacci grid was drawn, place your stop loss below the unbroken low. Aim for a risk-to-reward ratio of at least 1 to 2, ideally 1 to 3. I hope you now have a clear understanding of when to go long or short. If you still have questions, drop them in the comments. I read them all. See you in the next video. Take care.